Did you know that over 60% of consumers choose to get their home loan through a mortgage broker, and that this is predicted to increase to 75% by 2024? How could this be? Well, according to a study conducted by Deloitte, mortgage brokers can be thanked for over a 3% net margin reduction over the last 30 years, meaning that banks are making less money as a direct result of the competition mortgage brokers create. Brokers have literally saved the Australian public billions of dollars. Other than creating more competition, what are the differences between going directly to a bank or through a broker? Today we'll look at just that. I'm Josh Vecchio, mortgage broker with Hunter Galloway, the home for home buyers across Australia. And in this video, I'm going to walk you through my 8 tips to help you choose between a broker or banker, helping you not only with what the differences are, but the questions to ask step by step, so keep watching. One, specialist versus generalist. Here's a question for you. If you had to get a surgery, which doctor would you choose? The general practitioner performing the surgery every 3 to 4 months, or the specialist that does that exact surgery 6 times a week? The choice is obvious, isn't it? This is what brokers bring to the table. They're a specialist in one thing and one thing only. Contrast this with most bank lenders, who have an array of other duties to fulfill, from helping customers deposit to balancing the books each day. To find out if your banker or broker is a specialist, ask them these questions. 1. How many hours a week do you spend dedicating yourself to mortgages? 2. How many home loan customers have you seen and helped over the last 12 months? And 3. Over the same period, how many were in a similar situation to myself? So, for example, if you're a first-time buyer, you'd ask, of these customers you've helped, how many were first-time buyers? By asking these questions, you'll understand whether the banker or broker is a true specialist and if it's a fit for you. 2. Customer satisfaction. The Mortgage and Finance Association of Australia found that over 90% of broker customers were satisfied with the service they received, and that brokers' Net Promoter Score were in excess of 70. Side note, the Net Promoter Score is a metric to measure the overall happiness of customers, commonly referred to as NPS. Now, let's contrast this with the banks. The major banks are regularly in negative territory, and the highest regional only scoring in the 50s. On top of this, when we look at the Australian Financial Complaints Authority, mortgage brokers account for only 0.10% of total complaints filed. It's easy to see why mortgage brokers' market share is predicted to rise to 75%. So that you know if your banker or broker will be able to exceed your expectations, here are 3 questions you should ask. 1. Do you track your Net Promoter Score? And if so, how do you track it? With what software? 2. What's your current Net Promoter Score? And 3. Have you had any complaints raised against you over the last 3 months? It's by asking these questions you get a true understanding whether your broker or banker will deliver the service you truly need and want. 3. The benefits of going directly to the bank. By this point, you're probably thinking, there's no benefit in going directly to the bank, and that by doing so, it's simply wasting your time. And whilst you're probably right, there are some benefits in going directly to the bank. Firstly, if you're a customer of the bank, it'll mean you won't necessarily need to provide bank statements for the facilities they hold. If you're getting paid into these accounts, you won't also need to provide payslips. Overall, these are probably the 2 biggest benefits. And outside of this, the banks can and will stretch their friendship as acutely aware of what they call the comfort factor. This is achieved when you have 5 or more products with the bank. As an example, having your credit card every day, 2 savings, and a car loan with the bank would mean you have 5 products. And based on the bank's data, they know the likelihood of you ever leaving them is slim to nil. The bank got a term for it. It's called an MFI customer, or a main financial institution customer, and it's their goal. And once you're MFI, it means the bank doesn't need to be competitive, because they know the likelihood of you leaving their ecosystem is rare, and it's because of this they're able to increase their profits dramatically as a result. This might be news for many, as logically you'd think that the more accounts you have with the bank, the more savings you'll have. But for the banks, it comes down to two things: profit and data. Thus, they'll look to take advantage of this. And I saw this firsthand in my time at the banks. It's real and it works. To guard against falling into this trap, ask your banker these questions. 1. What can you provide a broker can't? 2. What's the difference between me going through a broker or going directly through you? 3. If there's another bank offering the same product at a cheaper rate, would you tell me? 4. Are you giving me a cheaper rate than a non-bank customer? It's by asking these questions that you'll get a great understanding on whether going directly to the bank will benefit you and ultimately avoid becoming an MFI customer of the bank. 4. Bankers versus brokers. Going to a banker could be likened to seeing a used car salesperson. They'll promise they're giving you a great deal, and you're probably getting one if you're comparing their products against their own. Kind of like that car salesperson saying, hey, it's the cheapest car on the lot. Yeah, sure, it's a great deal on that particular lot, but it doesn't mean it's a great deal. You wouldn't expect that car salesperson to say, hey, look, we've got that same car over there with the other car dealer on car sales at a cheaper rate. This is what you can expect when going directly to your bank. On the contrary, going through a broker gives you choice to a wide range of banks and lenders. And by doing so, you can leverage from their experience, having helped hundreds of customers before. So it means rather than having to fit a square peg in a round hole, a great broker will find a square hole to fit that square peg. And by doing so, saving you heaps of stress and anxiety. Brokers essentially guide you, showing you many options, including your bank if you desire. In this section, there's only one question you'll want to ask your banker. Excuse me, Mr. Banker, I've seen you at the car dealership last week and was wondering what the similarities between this role and that one has. At this point, don't be surprised if your banker throws you a set of keys and says, take it for a spin. Take this as your cue to leave and seek help from a great mortgage broker. 5. Are all brokers the same? The world has changed and the banks are essentially becoming forensic accountants, looking at everything from your live credit score, which essentially means they know what you've paid on time over the last 2 years, including your credit cards, personal loans and home loans. On top of this, they're going line by line through your bank statements, questioning everything. It was only the other week where we had a customer who was single and male who bought his sister a gift from Baby Bunting. It was for her newborn. The bank saw this and asked if he was pregnant. And if this wasn't bad enough, they're even Facebook stalking people to see if you really are single or not. It's just plain creepy, and it's never been harder to get finance approved. That's why you'll need a great broker. But not all brokers are the same. The left is what most brokers do. They get a general idea of your position and make a forecast. Essentially, it's their best guess, primarily guided by rate. And as you can imagine, a rock on a rope isn't the best way to forecast the weather, and nor is a best guess when it comes to finance. With us, we're a little bit different. We use many tools, starting with getting all your information up front. From there, our team completes a detailed analysis on this information, matching it with the bank's criteria. Then, from the lenders we qualify, we negotiate and present the best options. We look first at who can help and then what rates they've got, rather than the other way around. This is why in the same period when the industry's rejection rate was on average 40%, ours was at 3%. Using the right tools in the right way, like weather forecasting, makes all the difference. Questions you'll want to ask your broker are: 1. Over the last 12 months, what has your decline rate been? 2. Can you please explain to me your process in how you recommend lending options? 3. What happens when you're in a meeting? Who looks after my file then? It's by asking these questions you'll understand whether or not your broker is a right fit for you. 6. Do mortgage brokers charge a fee? In short, brokers don't charge a fee for their service. And I know what you're thinking, but there's got to be a catch. Does it mean that I get a higher rate going through a broker? Let me explain. The Productivity Commission, which is a government agency, found that, and I quote, distributing loans through mortgage brokers has on average increased smaller lenders' market share, and that these same lenders would on average need an additional 118 branches in order to maintain their market share in the home loan market. It's because mortgage brokers are only paid upon success of your loan that it essentially allows the bank to have a zero sunk cost. For most banks, it means they don't need to pay for marketing, staffing, a premises, and all the rest that comes along with an increased footprint. And here in Brisbane, Bankwest did just that, closing something like 5 branches in favour of distributing through the broker channel. All of this essentially means that because the banks are saving on distribution costs, that there's no detriment. In fact, we've seen in the past banks elect to offer their broker channel lower rates than that of their branch network, which means that if you went into a bank for a home loan, you'd be paying a higher rate than had you visited a broker with the same lender. So to get a clear picture in how your broker gets paid, ask these questions. 1. Do you charge a fee for your service? 2. Do you charge clawback if I discharge my home loan early? It's by asking these questions you'll understand both now and in the future if there's any fees payable in using your mortgage broker. 7. What does a mortgage broker actually do? A broker's role is essentially to be a conduit. Rather than telling you what to do, they'll actively do the legwork for you. From calling your solicitor if extensions are needed, to liaising with the bank to hurry them along so you don't have to. By engaging in a broker, they'll take on this burden. So, if you're a busy professional, have a family, or downright time poor, using a mortgage broker would be vitally important for you. To be sure you're choosing the right broker who'll do this for you, here are the questions to ask. 1. Do you do all the running around for me? 2. Do you have a team of allied professionals you work with and recommend that also take on the burden for me? 3. How do you take the stress out of the home loan process? It's by asking these questions you know if your mortgage broker is a fit and whether they'll be willing to take on the burden for you so you don't have to. 8. How do I know if my mortgage broker is legit? To know if your broker has a legit factor, you'll want to look at 3 specific things. 1. Reviews. Look at their Google and Facebook reviews. When looking at reviews, be sure to read between 5 and 7 of them and get a feeling for the business. Once you've done this, sort the reviews from lowest to highest. This will give you a great feel of the broker and see if they'll be a fit with you. 2. Awards. What awards has your broker won? A general rule of thumb is that an industry award given by either the MFAA or FBAA are worth more than those given by the industry magazines like The Advisor, MPA, or the Australian Broker. 3. Membership. Be sure your broker is a member of the industry bodies, both the FBAA and MFAA, either or. It's these industry bodies which hold brokers to a certain professional standard. And it's by looking at these 3 factors that you'll get an overall understanding of whether your broker is truly legit or not. Overall, the difference between brokers and bankers are vast. Having gone through the ways they differ, is it any wonder why mortgage brokers' market share is set to increase to 75%? Now it's over to you. Are you looking for a great mortgage broker? Did you know here at Hunter Galloway we help people across Australia? So if you're looking to refinance, purchase, build, you're in good hands. Simply reach out and call us 1300 088 065 or visit us online huntergalloway.com.au. Thanks for watching, and remember, hit that subscribe button and I'll see you next time. Thanks for watching.